Do you find yourself more confused than educated every time you watch a video about finance on YouTube? Modern content creators in the finance niche have really overcomplicated the road to financial freedom. Content flooding YouTube right now often skips the basic building blocks of financial literacy, and it tells you just to dive straight into the deep end. Just create a business, it's easy. Oh, just risk all of your money in cryptocurrency. There is no risk. Oh, just drop out of your 9 to 5 and buy a $10 million real estate portfolio. Simple as that, then you can escape the matrix. It doesn't make sense. It's all talk and no education. Now, of course, some of these videos contain a pinch of fact and are based on some valid financial principles, but the basic premises to financial literacy and building yourself a road towards financial freedom is as simple as understanding what an asset is versus what a liability is. Once you master those two definitions, you can create your own path to financial freedom and never watch a finance YouTube video ever again in your life. Give a man a fish and you'll feed him for a day, but teach a man how to fish and you'll feed him for the rest of your life. To truly define what an asset versus liability is, we need to take the textbook definition and toss it out the window, because the textbook definition will vary depending who you ask. If you ask an accountant, an investor, a friend, and a teacher on what an asset versus liability is, you will get 4 different answers, I promise you that. What truly defines an asset and a liability are the numbers, or more so, the cash flow. Assets build income, liabilities create expenses. It's so simple, but so vital to remember that relationship. Imagine the cash flow visually. Assets will move the cash into your pocket regardless whether you work or do not work. Liabilities will move cash out of your pocket in all scenarios. There's not a single scenario a liability will put cash in your pocket. Imagine the cash, imagine the cash flow. Many of us are raised to believe that the house that we purchase and live in is an asset. That brand new Mercedes that we get is an asset. That shiny engagement ring that we put on the credit card is an asset. And that is the trap that low income and middle class families are falling into. So let's take a step back again and think about cash flow. And now 3 diagrams about to pop on the screen, which have been taken from the famous book Rich Dad Poor Dad. This book is a highly recommended read if you have not read it. Now, these diagrams have been overly simplified for the purpose of this video, but it will help to provide some visual context to the movement of cash flow. Now, those from low income households often have to live paycheck to paycheck. Therefore, they cannot purchase assets and build their wealth. But on the flip side, they can also not afford luxury liabilities either. As a result, if you look at the cash flow, they get paid their salary and they pay their expenses, and that's it. That is their cash flow summed up. Most of us will fall in the middle class income trap. We get our salary, we pay our expenses, but because we have a comfortable salary, we can afford to take on some level of luxury liabilities. We may purchase that bigger house and therefore take on a bigger mortgage. We might lease that faster car and therefore take on car finance. Or we might buy some jewelry and just put it on the credit card because we can afford to take on the debt. But as a result, the middle class are therefore unable to build assets. And you can see the cash flow, it comes in and comes out, just like the low income households as well. Now, the upper class, on the other hand, do not have a salary. They have assets, and these assets produce income, which will cover their expenses and liabilities. Now, where it gets confusing in the finance content creator space is everyone is always trying to say there are bad assets and good assets. Oh, starting a business is better than real estate. Real estate is better than stocks. Stocks is better than crypto. Crypto is better than, I don't know, insert drop shipping. But let me tell you now, there are no bad assets. There are assets with higher returns and assets with lower returns. Therefore, assets that produce more income and assets that produce less income. But the key is to build a diverse asset portfolio. The simplest way to financial freedom is take a step back, look around you. Everyone comes from different scenarios and environments. See what assets you can get your hands on based on your environment and start building them. That is the key to financial freedom. It's as simple as that. And that wraps up assets versus liabilities.